This presentation is about corporate accounting presented by Sukhmani Gulati to Holmes Institute. Introduction. The proposed presentation is based on the analysis of income statement and cash flow statements of the companies known as BHP Limited, Santos Limited and Fantastic Limited. The presentation mainly focused on examining the information content of the cash flow statement and income statement and analyzes why investors find both of these financial statements useful for decision making. Income statement. Incorporated within the International Accounting Standard, organizations are required to prepare three financial statements, that is, statement of financial position, profit and loss statement, and lastly, cash flow statement, respectively. Statement of financial position denotes the position of the entity based on their assets along with their respective liability that is incurred during the financial year Robinson 2020. The author further mentions that profit and loss or income statement presents the entity's position in terms of financial viability and utilize the most among three statements, citing the capability of providing the relevant financial information pertaining to the entity. Cash flow statement. The credence that the cash flow statement is attributed to is based on the fact that the entity, irrespective of their size, does not post a substantial amount of cash with imbalances are a frequent occurrence in the financial statement. The majority of business, the net profit figures, is not simultaneous with the net cash figures, which makes it prerequisite that the business perform a reconciliation of the profit incorporated in cash flow statement. The author further mentions that operating activity denotes the amount of cash earned from business operation while investing in the activities denotes the amount of cash that collected through the business investments. The major source of cash for each three companies are categorized into two categories. These classification of cash sources are recognized as cash flow from operating activities and cash flow from investing activities. In terms of cash flow from investing activity, BHP sources the change in trade and other receivable. Santos sources dividend received, interest received, and receipts from direct customer. And Forever Fantastic sources the cash receipts from direct customer. In terms of cash flow from investing activities, BHP sources the sales of business, sale of non-current activities. Santos are the sale from disposable property and sale of business. Lastly, Fantastic sources the interest received and sale of business. In figure 1, the trend analysis can be made to examine the trend cash flow from continuing operations in last 3 years from 2017 to 2019. In this case, BHP Limited, the trend cash flow from continuing operation faced a major fluctuation as shown in figure 1. In figure 2, the above figure clearly states that the cash flow from continuing activities increased to 17.56 billion in 2018 and declined to 17.3 billion in 2019. Furthermore, the trend of Santos Limited shows in figure 2 is increased trend of highlighting effectiveness of continuing operation. Lastly, the trend of cash flow from continuing operation for Fantastic Limited shows in figure 3's improvement trend, where it shows the negative cash flow from continuing operation decreased in 2019. During 2017 and 2019, the entire last 3-year period, the cash flow from operating activities of BHP Limited is greater in comparison to income generated by the company. This is because of several adjustments made to the net earnings to determine the cash flow. Another reason is that non-expenditure, for instance depreciation and asset, has been significantly greater than in size. Moreover, these cost expenditure were discovered as higher than $9 billion in every year. Also, the modification of capital for 3 years have also remained adjusted in 2017 and 2019. The cash flows from operation activities which were developed by the continuing operation of the BHP Limited in the assessment period has been discovered to be the higher in comparison to capital expenditure of the company. The below table illustrates that in every year the cash flow from above operations is bigger than the cost incurred to the company. This signifies the management was able to generate sufficient cash from operation to encounter its liabilities or capital expenditure. In order to analyze that if the cash flow from operation covers both expenditures as well as dividend payment, analysis can be made where the total OCF are subtracted from capital expenditure and dividend payment. The above table signifies in the year 2019 OCF is not able to cover the dividend payment from OCF after paying the capital expenditure. BHP Limited has generated excess cash flow from operating activities or operations in 2018 and 2019, where it was $18.4 billion and $17.8 billion in comparison to $16 billion in 2016. It increases the OCF was consumed, payback longer portion of the company's existing debt in term of current liabilities declined from $13.99 billion to $12.34 billion as the result of excessive cash flow from operating activities. Though the firm made investment in purchasing property and plant equipment and investing in equities during 2018 and 2019. All the organization for which the evolution has been done actually made efficient use of their current asset and current liabilities apart from their cash and cash equivalents. Items such as receivable and payables are utilized to fund the working capital and similar amount is adjusted in OCF as working capital amount. The BHP Limited has made excessive use of their trade receivable as working capital. The surplus in receivable is subtracted and the reduced in receivable is added back to the net earnings of determined OCF. The company has used trade payables as working capital and reduced the payables is subtracted and surplus in added the net earnings to finance operating cash flows. There are several items that affected the cash flow for each of the firm. For BHP, the major utilization of cash was used for mining and exploration. On the other hand, profit and losses were made from the equity investment, where most of the cash flows used for exploration. BHP Limited repeatedly paid additional long-term debts and issues for which the new were lesser than the previous year. In terms of Santos, the major cash used were mining, exploration and purchasing the business and tangible assets as the plant equipment, whereas they paid royalty which could be classified as major expenditure negatively impacted the cash flow. Lastly, Fantastic Limited made new stock issues with excessive cash and made acquisition of some asset including intangible assets which were impacted positively in the cash flow because production capacity was imposed. In terms of capital expenditure for each of the firms, Santos expenditure are much higher than the Fantastic and BHP capex. On the other hand, capex of Fantastic appears as lowest in comparison of other two firms. From the above trend analysis of the dividend paid by selected companies, it has been found that Fantastic Limited did not pay any dividend in last 3 years. Santos, whereas, has paid dividend in 2018 and 2019, and in 2019 they paid increased dividend to their investors. Whereas in case of BHP, they increased their dividend in 2018 to $5.2 billion, which was further increased to $11.39 billion. Net borrowing. Santos made a bigger capex in 2017 till 2019. The management of the organization had issues new debts for funding and growing its capex. The capex of the company is higher among three companies, especially in 2019. On the other hand, the position in which the term of borrowing is improved and the liabilities were decreased, but the company spent the lower amount in dividend in 2017. BHP made the massive debt issue during the last 3 years amounted to $3,360 million in 2018 but increased dividend payments. Moreover, the new shares were issued by Fantastic Limited also amounted to $2,630 million in 2018. Working capital. For BHP, the working capital in 2017 it needs declined from 3.003 billion and the same also increased the OCF. As observed from the cash flow statement, Fantastic Limited cash receipts and both credit and cash sales combined together has registered a decrease with rapid pace which has led to initial figures to be halved in a period of 3 years. With respect of second business, that is BHP Limited, the entity has been in a position to decrease and increase their operation of cash flow annually along with involving the capital expenditure along with entities dividend expenses respectively. Lastly, as denoted, Santos has posted good standing with respect of their cash flow figures. As observed from the aforementioned findings, the entity that has considerable position to gain the capital and further investment, BHP Limited, is identified to be the best suited for this selection. Conclusion. In the light of the final analysis In the initial part, the element of financial statement as mentioned in the International Accounting Standard were noted. The purpose of these financial statements was mentioned briefly. Cash flow statement has then discussed and how it provides a benefit to the stakeholders along with the presentation, which has been mentioned that it depends upon the respective income statement. Towards the second part, based on the annual reports of the mentioned entities, the financial capability to each entity was subjected to critical assessment, and towards the conclusion, the final answer was discussed and justified based on the annual report findings of all three mentioned entities, and it is discussed as why BHP Limited was considered the best suitable organization that could be considered for the financial lendings. Thank you.